Naveen Mathur joining us this morning is Director Commodities, Currencies and Gift City IFC at Anand Rathi Group. Naveen, very good morning to you and thank you so much for joining us this morning on India Market Open. I'm going to ask a very, very simple question first. What happens to those who hold these ETFs? What if they want to exit? And obviously, it's clear that you can't come in right now.
Thank you very much, Tamanna, and good morning to you and all the viewers across. I think the silver has been, I would say the bullion has been a great story over the last couple of months, I would say particularly last couple of weeks. We saw silver prices and the gold prices touching all-time highs. There has been a continuous rally. And as what we saw, the demand, the investment demand, the industrial demand, and particularly the central bank diversifying their foreign exchange reserves have been predominant factors for the prices to move on the upside. Around 72% kind of returns in Indian markets and around 61% kind of returns in the dollar terms for silver. The question is pretty much valid. For a retail investor, I think the silver ETF continues to be, I would say, an important investment tool. It's great that we have seen silver ETF until a few years back. We only had the gold ETF. So the silver ETF, I think, is something which the investors should look forward to if they're looking forward to take an exposure. You can't buy silver and hold silver bars into your households and save deposits. So I think the underlying factor remains pretty much strong. The outlook remains pretty much strong. But having said that, a cautious approach would be that a profit booking might happen at these levels, since we have broken all the records of 2011 April, both in international markets and in Indian markets too, last month. So I think the ETF route continues to be the best way, Tamanna, and the people looking forward to diversifying their asset classes should contribute approximately 10 to 12% of the disposable income or the corpus into bullion. I will not say just the silver, but the gold ETFs too, because they act as a risk-averse asset classes. And the mayhem in the markets during COVID in 2002 or 2008, we have seen the kind of an hedge on the bullion. So I would say that the retail investor should not worry, keep investing in a staggered way on both the gold ETFs and the silver ETFs. Neeraj.
Yeah, no, Naveen, fair point. And frankly, at times, simplicity works best, right? Just one quick question, Naveen. I don't know if you form a view on silver, gold, for example, but it's a rarity to see gold prices doing what they are doing while yields are doing what they are doing. Otherwise, there used to be a perfect correlation of sorts, right? So could this time around be different in that we've had a rally and the rally could continue? Part one of my question is that. Part two of my question is there any kind of, I know you answered that, but is there any kind of inference that we can draw from funds going out and stopping subscriptions to the ETFs? Because a lot of rumor mongering around availability of physical gold, physical silver.
I'll ask, yeah, that's a very valid question, Neeraj. I'll ask the second question of yours the first way. See, the London inventories have gone down drastically because of the exports and the uncertainty which was hovering around the tariffs. So much of inventory has moved out of the LME. We are sitting at a very low inventory levels currently. People have moved out their inventories to the US before the tariff. And there is a crunch. Being whatever supply we had, there is a crunch today. And a significant crunch, I would say, and therefore the premiums. The inventories are one part of the story. The demand and the supply question is also the other part of the story. The supply has been in deficit, Neeraj, for the last 5 years in silver. And if the prices have moved so high, there is kind of a mentality, the herd mentality of getting into the rally. People who have missed or people who didn't enter into the prices when they are bottoming out. So that's the other consideration which we need to see, the supply side deficit, the premium, and the inventories at the LME. So that's the point which would continue to be. You don't get the supply immediately by just click of a button or just thought of getting the supply. So I think that's one of the very, very critical aspects which one needs to understand. The mine production has gone pretty low across the world, and therefore,
Right.
with that particular thought underlying silver on the ETFs, from where you would get the silver supplies, even if, in spite that,
Sure.
the rush to the ETFs would continue. So therefore, it might be the case. We have seen UTI and quota. It might be the case in due course of time.
For the others. Yeah.
I'm not saying it perfectly, but then it might be the case that the
Sure.
other
Sure.
two might look into
Okay.
for.
Okay. Naveen, sorry, but lovely to have your views. Out of time on this piece completely, but great talking to you today. Thank you so much, and have a silver week ahead. Yeah.
Thank you very much, Neeraj and Tamanna. Thanks a lot.
Yeah.